please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, 3 months after a CBI special court gave a clean chit to all the accused in the 2G scam, the man who started it all with his presumptive loss theory has broken his silence. CNBC TV18's Ronojoy Banerjee caught up with Vinod Rai, the former CAG, in what was his first interview after the 2G verdict. Rai said that his conscience was clear on the 2G case and asserted that there were no skeletons in his cupboard. That's not all. Rai also said that the 2G verdict had not lessened the stature of institutions in any way.
And when there are accusations being made against you that you were the political tool of BJP and as in capacity of CAG, how do you then personally, at a personal level, at a big macro level, eventually things will get evened out. But at a personal level, how does one deal with it? And what would your message be to some of the other aspiring civil servants who may have seen the episode and would have found it rather disheartening?
Did it matter to me? In what way has it changed me? Nothing. There was a road ahead. You have to be sure about one thing, that you don't have an Achilles heel. You don't have a skeleton in your cupboard. And if you are robust on facts, you are sure about what you are going to be putting out into public domain, you have nothing to worry. It's all people will see, if you throw a stone at somebody, he's going to retaliate. So we were aware of that. So there's no two ways about it. So you
stand by whatever decisions you've taken in the past?
In the past, and not only so, I've seen green shoots all over the country where people are able to stand up and say, don't give me an illegal order. You want to give me an order? Give it to me in writing. See, in a parliamentary democracy, the political executive is always supreme. He has to give an instruction to the administrative executive in that sense, because he's accountable to the people. But that instruction has to be within the confines of legality and propriety. And if it's other than that, the bureaucrat is saying, please give it to me in writing. So I think good things are coming about, and I can see those green shoots all over the country.
And then this, maybe you could go first, maybe with a personal anecdote of your, looking back, at your sort of illustrious career. Was it at all difficult the last few months, especially suddenly, because civil servants are said to be impervious, immune from, from political, push and pull. But suddenly you became a political figure in that sense. How has it been? So end this giving me a sort of a personal anecdote on how you dealt with the last, whatever.
See,
since the CBI court order or whatever.
Oh, I believed in doing what I was mandated to do and to doing it perfectly well. And I believed in doing it in the sense that accountability to myself, I was absolutely clear, my conscience was clear about it. And I stood by it. I knew that the moment you are picking on people, they are going to be picking back on you. I stood my ground, nothing much happened, things came into public domain, and time-tested methods were evolved, courts, this, that, etc. I don't think it has changed me in any way, and I don't think it has lessened the stature of the institutions also in any way.
Now, Vinod Rai is also the chairman of the Bank's Board Bureau. He talked about the controversy over the Bureau's report on banking reforms as well. Rai blamed the media for playing up just one aspect of that 60-page report. He also said that the RBI had enough powers to regulate public sector banks.
What has been brought out in the media is a letter which I wrote about 9 months back. Okay, and then after that, the finance minister has said, and so have I said, and you people, which means media, has seen me converse with the finance minister any number of times on various issues. So, in a 60-page compendium, if you pick up one sentence, that doesn't constitute the entire set of recommendations. So there will need to be no confusion about it. It's a question of a process, but nobody can expect either the government, the DFS or the BBB to deliver in 2 years' time. As I said first, that something which is 50 years old, you can't overturn it and do it. If you do it in a hurry, it doesn't go. The reform is not sustainable. If you do it slowly, think over it, it becomes sustainable, and that's what we are aiming at.
Okay, moving on to a mega CNBC TV18 exclusive story. We learned from sources that governments may start inviting fresh bids for the Maharaja in the next few days. In fact, remember, the government plans to complete the divestment of Air India by end of this calendar year. Sindhu Bhattacharya, who broke that story, is here with the details. Sindhu, what are you picking up from your sources in terms of how far this has reached?
So our sources tell us that the government has decided to offload 76% stake in Air India, the airline, Air India Express, its international low-cost arm, and all of the 50% stake that the government holds in a ground handling joint venture called AI SATS. Our sources tell us that the expression of interest inviting bidders for the strategic disinvestment should be out in the next few days. The government is believed to have kept a criterion of 5,000 crore net worth for potential bidders. This could possibly mean that none of the Indian airlines qualifies to place a bid by itself, and it might require a consortium, to form a consortium with other well-endowed parties to be able to place a bid. Sources also tell us that the government may put in a condition where any successful bidder has to keep employees of the airline for 1 year after the disinvestment process and then offer a VRS to get rid of them. The government is also believed to have taken a decision on what to do with the debt. Remember, the debt on the airline is about 50,000 crore rupees, though some figures put it at well beyond 50,000, close to 70,000 crore. We are not sure what the decision on the debt is, but earlier we were told that it is possible that the airline retains only about 20,000 crore of debt, which is backed by airline assets, the aircraft assets. The government has also decided that this entire process should be finally completed by the calendar year. The expression of interest and the bidders may be finalized by June.
Okay, so that is an ambitious target. Sindhu, thanks for joining in with that. Moving on to the ongoing GST collections that have been coming in. GST collection data for February is out, and the government has garnered a little over 85,000 crore rupees. That's the lowest mop-up since December. So these figures are up to March 26th. The government thinks that this is due to less number of working days in February, and they think that tax evasion is still lingering in the system. The government, in fact, expects tax buoyancy to come back in April once the e-way bill finally kicks in. But let's get to another big story that we have been tracking all evening today. Strong protection of UID AI servers is not enough to safeguard Aadhaar data. That's the Supreme Court's latest observation in the Aadhaar case. Hearing the matter today, the court also said that in the absence of the law, the data will continue to be vulnerable and could be exploited by private entities. The Apex Court red flagged these concerns during UID AI CEO Ajay Bhushan Pandey's presentation on the unique identity number. Let's bring in Ashmit Kumar, who has been tracking these developments. Ashmit, take us to the details of the courtroom action today.
Well, some tough questions being asked essentially by the Apex Court. Today was essentially day 2 of UID CEO's PowerPoint presentation before the Apex Court. Mind you, it's a 5-judge bench, and we had some stiff questions coming in from especially Justice D.Y. Chandrachud. The question essentially being asked is that this entire process of authentication of data is a two-way street. On one hand, you have the UID servers. On the other hand is the point of collection. The second point, the point of collection, is where the Supreme Court in fact stressed today that while there is a safeguard in place, the integrity of the UID servers is intact. The question being asked is, what about the sanctity of data? What about the integrity of data at the end of where the data is collected? That is the question being asked. Say suppose you offer your Aadhaar details or your personal details for getting a new SIM card with a telecom company. The data that is being divulged, what is this mechanism in place for securing that data? That's essentially the question being asked. The Apex Court observed that as of right now, there's a vacuum in place. There is no data security mechanism. There is no legislation. And that up until the government comes forth with the legislation, the data, the user data, your data, mine, will constantly be vulnerable, will constantly be at risk. So some serious observations, some serious red flags being raised by the Apex Court. The hearing, of course, in this case is far from over. It will continue on Tuesday of next week. Back to you.
Absolutely, Ashmit. Very serious concerns being raised there. And thanks for joining in with that. But you can catch our special discussion with Ashmit on this issue only on India Business Hour at 9 p.m. today. But moving on to another exclusive, reforms initiated by the Mamata Banerjee-led West Bengal government in the sphere of ease of doing business have catapulted the state to the numero uno position in the first phase of rankings. Bengal shares the spot with Chhattisgarh. Remember, this time around, the ease of doing business ranking will also take into consideration the feedback received from the industry while tabulating the final score. Rituparna Bhuya joins in now with the details. Ritu, the final scores will be out in a few weeks' time, yes, but Mamata Banerjee can draw some solace with what you have picked up from your sources.
This year's ease of doing business rankings is divided into two parts. In the first phase, the state's report on 372 reforms that DIPP mandated. That score is in, and as per that process, West Bengal leads states in the ease of doing business rankings, along with Chhattisgarh with a score of 99.73%. After about 6 weeks, we'll get the results of the second phase. Now, the second phase involves World Bank going out and asking the industry in all these states for user feedback. That user feedback score will then be added to the reforms related score, and a final ranking will then be arrived at. However, as of now, West Bengal and Chhattisgarh is ranked number 1, followed by Jharkhand, Madhya Pradesh and Haryana with a 99.46% score at number 2, and Rajasthan and Gujarat with 99.19% score at number 3. Almost 17 states have scored more than 90% in these rankings. Of course, the rankings will change once the user feedback score is added, and it remains to be seen if West Bengal and Chhattisgarh remain the top state to do business when the final rankings get released by the DIPP in about 6 weeks from now. With that, it's back to you.
Okay, so another 6 weeks and we will have those official data. Thanks, Ritu, for joining in with that. We will take a very short break. On the other side, Maruti Suzuki may have deferred its plan to launch its first fully hybrid vehicle. Sources say the plan to launch an SCross hybrid vehicle by 2019 could be put on the back burner. And the dates are out for Congress and BJP to lock horns in Karnataka. The state will vote on the 12th of May and results will be declared on 15th of May. Stay tuned for that story. Welcome back. The big story from Deal Street. Pharma major GlaxoSmithKline is set to acquire Novartis' stake in their consumer healthcare joint venture. GSK is buying 36.5% stake in the joint venture from Novartis for $13 billion. In its statement, GSK said that it is also initiating a strategic review of Horlicks and its other consumer healthcare nutrition products to support funding of the transaction. Archana Shukla joins in now with more details. Archana, take us through the exact details that are likely to come out.
Well, it's just a week after it pulled out of the $20 billion bid to acquire Pfizer's consumer business. GSK has now pitched this $13 billion buyout of the consumer healthcare JV that it has with Novartis since 2014. And to fund such a large transaction, GSK is intending to sacrifice its oldest nutrition drink brand, Horlicks, which is almost its full India business. The company is initiating a strategic review of Horlicks and other consumer nutrition products, and also an assessment of GSK's 72.46% shareholding in the Indian listed consumer subsidiary. The idea is to slowly increase focus on OTC portfolio and brands like that of Sensodyne, Eno, Otrivin, etc. in India as well as globally. Now, for GSK Global, consumer health contributes nearly 26% to revenues, and of this, India contributes over 80%. So, of the FY17 total revenues of 5,050 crores roughly, India consumer healthcare contributed nearly 4,400 crores. So you can see the importance there. And for India consumer business, the health food drinks category, which is Horlicks and Boost brands and others, biscuits and foodles, are the cash cow, and they contribute nearly 90% to revenues. Now, with the next chart that comes up on your screen shows the market share. With a 56% market share, Horlicks and Boost together are leaders in the $1.1 billion malt-based drink space in India. This segment has seen some headwinds post-demonetization, but analysts say if Horlicks comes up on the block, companies like Danone, who have been increasing scale in this space, or even Nestle, that still has to make an entry, could be interested in picking up the legacy brands. The result of the strategic review will be out by end 2018, and GSK has clarified that there is no assurance that it will result in any transaction. We'll bring you every single update in this deal going forward. Back to you.
That'll be an interesting one, Archana. I'm a Horlicks fan myself, so that'll be something that we'll be watching very carefully. Thanks for joining in with that. We'll take another CNBC TV18 exclusive. India's largest car maker, Maruti Suzuki, has put its plans of launching the SCross on the back burner. Now, earlier, the company was planning to launch the SCross, its first fully hybrid vehicle, in 2019. So what exactly prompted them to do a rethink? Utkarsh Chaturvedi is here with exclusive details. Utkarsh, what went wrong, and is the plan to look at a hybrid vehicle completely on the back burner now?
Motown has been waiting for long when it comes to a tax cut on hybrid vehicles, and it was a matter of time before one of them rethinks their strategy. What we are picking up is that Maruti Suzuki has held the plan of its first fully hybrid vehicle, the SCross, which was codenamed YGB, and was supposed to be launched in 2019. The RFQs for the same vehicle was floated by the company and has been cancelled, is what we are picking up from multiple sources. Also, the current vehicles which have the micro-hybrid technology like the Ertiga, Ciaz, and also the current model of the SCross is also under the radar. Maruti will be relaunching the Ciaz and Ertiga with newer engines later this year and is still contemplating whether to continue the hybrid models in the same or not. The reasons are plain and simple. An increase in the taxes of hybrid vehicles has resulted in slump in sales. And what top management individuals in companies suggest us is that to make money in such high taxation on hybrid vehicles is not possible. But automakers, however, are still hopeful and have been raising concerns to the government, which till now has not resulted in anything concrete. Until then, you can expect more car makers to put their hybrid plans on the back burner. With that, it's back to you.
Okay, Utkarsh, thanks for taking us through those details. But from auto, let's talk about something that the markets will be watching for tomorrow. SEBI will be holding a crucial board meeting tomorrow. We learned that the market regulator might be imposing a trading ban on companies that are currently undergoing insolvency proceeding. But that's not the only item on that agenda. Yash Jain is here with what we can expect. Yash, what's on the board meet agenda this time around?
Well, the last SEBI board meeting for the financial year 2018, and the most important aspect would be any discussion or amendment as far as the insolvency and bankruptcy vertical is concerned. We are given to understand that SEBI is likely to consider a proposal with respect to bringing a trading ban on companies which go under insolvency and bankruptcy. Of course, it has been a popular demand from various players, but now it seems to be catching the eye of the regulator as well. Also, what I'm given to understand is that SEBI might consider the proposal of bringing some relaxation as far as the minimum public shareholding of 25% is concerned for companies which go under IBC, and letting the new promoter, the incoming promoter, hold and infuse more than 75% equity in these companies is concerned. And this is to ensure an effective turnaround of these sick companies. As far as the delisting of these companies which go under IBC is concerned, we are given to understand that SEBI might prove some relaxation there as well with respect to the reverse book building procedure, which is a part of the delisting norm. Coming to the next important point, which is with respect to the regulations on non-compliance of the listing requirements, we are given to understand that SEBI might give more powers to exchanges to essentially freeze the promoter shares in these companies which do not comply with listing regulations. Also, if there is a continuation which happens as far as non-compliance is concerned, then exchanges might also be given the powers to initiate delisting process for these companies. The third and the most important would be the whole buyback setup which we have. SEBI is looking to put a cap as far as how much of quantum can be offloaded in buyback. That is expected to come around 25%, and also it is looking to put a time interval between two successive buybacks from a same company, which we'll have to see what is the time interval, and which means that the company won't be able to come up with a successive buyback in that period of time.
Okay, fair enough, Yash. We will know all the details tomorrow afternoon mostly. But let's quickly take a look at how the Indian equity markets fared today. The Lal Street saw a good follow-up to yesterday's stellar rally, with most indices ending at over 1 week high levels. So you can see the screen of green over there. The Nifty rallied 0.5%, with financials contributing over half of index gains. Sensex rallied about 100 points. Banks slightly outperformed with gains of about 200 points. Now, mid-caps were the star of today's trading action. That index jumped about 250 points today. Anuj Singhal joined in now with a wrap of today's trading action. Anuj, it's a good day very clearly for the bulls, but you know, with the long weekend coming up, how sustainable is this rally?
Good follow-up for the bulls today, and especially considering the fact that mid-caps rallied today. That was one area which was not working yesterday. Yesterday was all about large caps. Today was all about mid-caps, sharp mid-cap outperformance. In fact, if you take a look at the index, the top gainers didn't really have much weight in the index. Stocks like HPCL, IOC, Hindalco. Yes, and SBI moved, and that had, of course, a decent weight. But then, you know, stocks like iShares, IndusInd, so decent move in some of these names. On the losing end, you had stocks like Bharti Airtel and Bharti Infratel, along with Bajaj Auto, which were down. Outside the index, big gainers today. JSPL was the top F&O gainer. IDBI, Biocon, Indian Bank, Mahindra and Mahindra Financial, Muthoot. So a lot of NBFCs did well. A lot of small banks also did well. Stock of the day today by a distance was Bandhan Bank. Was the top traded stock and is listing with phenomenal gains, 25% premium on that one, right up on day one today. There were some losers as well, Fortis and Canpin Homes, where the market is expecting some kind of deal, and Balrampur Chini, which has been making 52-week lows. So all in all, the bulls would believe that last 2 days at least have given them hope that the recent lows should hold. Tomorrow's expiry, and then we have a 4-day truncated 4-day weekend. So it will be interesting to see how the markets move tomorrow.
Absolutely, Anuj. It will be interesting to see how we actually see some reaction of the bulls tomorrow. But let's shift focus quickly to the big political headline. The Election Commission has announced the date for Karnataka elections. The state will in fact vote in a single phase on the 12th of May, and the results will be announced on the 15th of May. Now, this announcement got marred in a controversy. Even before the Election Commission announced the poll date, BJP's IT cell chief Amit Malviya and Karnataka's Congress's social media in charge, Sri Vatsa YB, tweeted the dates. However, they got the counting date wrong. So Amit Malviya on cue later deleted his tweet. Both of them, in fact, have claimed that they picked up the dates from television reports. Meanwhile, Chief Election Commissioner O.P. Rawat has promised strict legal and administrative action in that case.
I am blaming the government and party. How they came to know? Because Central Election Commission is an independent body, and before they giving all the details about the election date and everything, how the BJP came to know? It means that something is wrong in Central Election Commission.
Well, it is a secret matter. Dates are not to be known in advance to any political party. So his announcing it has hurt our party image. But how seriously the party views this, only the party president can decide. You should ask him.
Al Rama follows politics of any kind. But with that, it's a wrap on this edition of What's Hot. Thank you for watching. Dalal Street saw a good follow-up to yesterday's stellar rally, with indices ending at over 1 week high levels. The Nifty, in fact, rallied 0.5% and Sensex rallied 100 points. We'll bring you all the trading action on Markets Today Talkback, which is coming up next. Stay tuned. In another 30 minutes, we'll be back with India Business Hour with all the top stories of the day. Stay right with CNBC TV18.